Hi, Tom. Good to see you.
Hey,
Today
Erin.
we have 2 tips to avoid paying taxes on your Social Security benefits, but this does require a lot of planning, which is why we're talking about it today.
Yep.
Social Security income is not tax-free income, but it is tax preferred. So let's just start by breaking down how are Social Security benefits taxed.
Sure. So in 1935, when they came out with the idea of Social Security, Franklin Delano Roosevelt said, our golden rule is we'll never tax this money. Well, he's dead, and so are all the congressmen that voted for it.
Yep.
So in the 1980s, Ronald Reagan found that the government was broke. They needed some more tax revenue. So they said, hey, look, if you are single and you make more than $25,000 a year, or if you're a married couple and you make more than $32,000 a year, you're rich. So we're going to tax up to 50% of your Social Security benefit. Well, that went along for about 10 years. And then Bill Clinton realized that the government was even poorer in the 1990s than it was in the 1980s. So they said, well, if you're single and you make more than $34,000 a year, or you're a married couple earning more than $44,000 a year, you're super rich. So we're going to tax up to 85% of your benefit. So that's where we are. Those numbers have never changed since the 1980s. So what does that number include? Well, they count what they call provisional income. There's an equation for that. And that's basically everything that you earn. So if you're still working, earned income. If you have rental income, that counts. If you have dividends from your stock, interest from your certificates of disappointment. If you have municipal bond income, which everybody thinks is triple tax-free, but it's not tax-free from your Social Security equation.
Mhm.
All of that goes into the pot, right? And so if you are above, and as well as half of your Social Security benefit. So if you add all of those numbers up and you're over those markers, then your Social Security benefit is going to be taxed at whatever income tax bracket you're in.
Right. Okay. So again, this is about income. And so to avoid
Right.
those taxes, it's to create those tax-free income sources. And number one that you and I have talked about before, Tom, are considering Roths or Roth conversions.
Right. So any income that you take from a Roth or a converted Roth account, none of that is taxable.
Mhm.
And so because none of it is taxable, it's tax-free, right? And it doesn't count as provisional income. So thinking about doing Roth conversions today in a tax discounted environment that we're in may make sense for some people. Yes, the pain of paying tax today is there, but I can assure you that pain is going to be much greater in the future. So creating that tax-free account for yourself in the future will go a long, long way to saving you taxes far into the future.
And then another way to create that tax-free income is cash value life insurance policies. I know this is where you are an expert, so explain this to me.
Sure. So right behind me, you can see the book Becoming Your Own Banker
Mhm.
by Nelson Nash. You can also see the Ed Slott book. Ed Slott says that the life insurance code in the Internal Revenue Code is the least utilized or most underutilized part of the Internal Revenue Code. So the cash value life insurance designed properly have a huge tax benefit to people, compounding growth, and utilizing the loan mechanism within a cash value policy will also allow you for tax-free income into the future that does not count as provisional income. So designed in a certain way, you can kind of look at a cash value life insurance policy as a supercharged or a Roth IRA on steroids, because you're getting a lot more benefits out of it, including something that we've talked about in the past, which is a possibility of a long-term care benefit within those plans. So now that's extra cash flow that someone can save in retirement because they don't need a traditional long-term care policy.
Mm-hmm. And this is where I should also remind everybody watching that you are the only Nelson Nash certified advisor in all of New Jersey, right?
Correct.
Yeah.
It's still amazing to me, but after all these years, I still am.
Yeah, well, and it goes to show. I know that you are always, about ongoing education. So this is helpful. And I've got to say, you're such a great resource here. So if somebody has questions about creating these tax-free income sources and how to avoid paying those taxes on their Social Security benefits, what's the best way to reach you?
Shoot me an email, tjoconnell@internationalfinancial.com. Call the office, 973-394-0623. Always happy to help, Erin.
That's great. All right, Tom, thank you.
Thank you.